This is Danny Gould with the Gould team, selling Silicon Valley, back with another Silicon Valley market snapshot for the second week of March here in 2019. Guys, it's another week and another story to tell. Look, I feel like last week's message may have been like a little fear-mongerish, right? I don't want to instill fear in anyone, and I don't want to make you panic sell or do anything that you don't want to do. My intention here is to simply deliver the data, analyze the data, and give you some ideas, tips, tricks as to how to capitalize on all of this, because I guarantee you not everyone is getting this kind of analysis and is able to do this on their own. And so what I really want to stress today is that if you are a buyer or a seller in today's market, you should be paying attention. If you're thinking about buying or selling in the next 24 to 36 months, you should absolutely pay attention. If you're planning to hold on to your property or properties for the next 3 to 5 to 7 years, this doesn't really impact you, right? Because as we know, the market does this, right? And sometimes it's going to go up, sometimes it's going to go down. But if you plan on holding your investments and or personal residences for any extended period of time, just weather the storm. Don't feed into the panic, right? I got a really stressed out call from a potential seller like this last week, and he was saying, Danny, like, is the market going to crash? Is the market going to crash? And we talked about it. We talked it out over the phone, and he wanted to sell because he thought the market was going to go down. And I said, well, what are you going to do with the money? And he had no idea what he was going to do with the money. And he said, well, I'm just going to hold on to it. And I said, well, you're going to pay capital gains on it because you have multiple investment properties that you want to sell. You're going to pay capital gains? Like, that's going to wipe out 30% of the gain that you made. Whereas if you just hold on to the property, I mean, the worst it's going to depreciate in a declining market is like 15%, 20%, but then it's going to pick back up. So, like, why are you going to take a bigger hit on your property, right, than you need to? And we talked it through and everything, but just don't buy into the panic, all right, folks? Like, it's really not that serious, right? It's serious, don't get me wrong, but it's not that serious, okay? Let's talk about the data right now, because I really think there's some interesting things to look at right now. Remember last week, I compared the trends of active to pending sales, right? And as we ramped up after the recession, active to pending, right? There was a lot of actives, very little pendings, and then everything started to even out, right? And then for a long time, we've had more pendings than actives. This is the first year where we've had consistently more pendings than actives. So if you think about it, it's kind of like this little parabola, right? We're right there. We've reached the apex, and I think everyone can agree, right? The market just takes some time to react to everything before prices really take a hit. Because, like I've mentioned in previous weeks, there's feast or famine, right? So there's some weeks where there's some houses that are being sold very quickly, multiple offers, record sales, and then some homes that are sitting 30, 60, 90 days, right? So let's look at this right now, because it was very interesting, right? Some very interesting things. Look at this. 945 to 965, 995 to 838. Well, but if you look at this, I mean, look, this same week, in 2016, if you remember, was a great year for Silicon Valley real estate for sellers, and we had 900 active homes. So don't, like, you know, if you just look at the heat map, right, and you look at the active listings that are here in Silicon Valley, you look at this and you're like, wow, there are anywhere from 100 to 200 to 300, and in Cambrian, I mean 463% more homes. Wow, we're screwed, right? We have way more inventory, but that's not the case, right? You have to look at, this is comparing it to last year's number. Last year was exceptionally low. Last year was the outlier. This year is more in line with what we were expecting, or what we should expect here in Silicon Valley and in Santa Clara County in particular. But look, every year, 900 more pending sales, right? More pending sales, more pending than active. Right now, more actives than pendings, right? Now, I also we kind of neglect the condominiums and the townhomes, but what I really wanted to focus on today is people have been asking me, what is your message to buyers? Because I've been kind of focusing on the sellers for a long period of time. And I think everything is driven from a seller's perspective, right? Because here in Silicon Valley, if you're a first-time home buyer, right, a lot of the things that I talk about are applicable, but not as applicable as someone that's either selling their property, downsizing, or leaving the area, and or selling their property and buying something that's bigger. And I think if you're in that latter category and you are upsizing, then now is the time to act. Now is the time. Think about it. I mean, you're literally in a position right now where the market is now is probably not the time. Like, it was probably like May of last year, right? But there's no better time than the present, right? Because right now, your home has not depreciated substantially, unless you're like in a weird market where, or a little weird pocket where a bunch of listings have come on all of a sudden, right? But for the most part, condos and townhomes are still holding their values, right? But what happens when the recession hits? Do you think the single family homes are going to take a bigger hit, or the condos and townhomes? Because traditionally and historically, condos and townhomes are the first to fall, right? In a recession. Their values are the first to fall. And they generally don't hold their values as well during a recession, right? As single family homes. And so, if you're thinking about selling your condo and townhome or townhome here in Silicon Valley and upsizing into that dream house, right? Now's the time to do so. Think about this. If you sell your condo right now at close to maximal value and buy a single family home at probably, close to maximal value, well, then people say, well, I'm buying at the peak of the market. Yes, but during the recession, that single family home is going to hold its value way better than that condo or townhome. Do you understand what I'm saying? And so in this kind of environment, this is the best time to move up, because you're not going to be facing multiple offers and bidding wars on every single property that you go up against, right? Yes, it may take longer to sell your condo or townhome. My team has actually helped several sellers in the last 6 months sell their homes contingent on the purchase of another one. Sorry, I said that backwards. Buy a home contingent on the sale of their condo or townhome. These contingent offers are getting accepted. It's not out of the norm. It's not out of the question. And with a small rent back period, you can easily get it done. I'm not saying that this is for everyone, but I'm saying that if you've had thoughts of like baby number 2 or baby number 3 is on the way, right? You've got that 2-bedroom condo or that 3-bedroom townhome that's a tri-level, and you're worried about, kid number 2 falling down the stairs like kid number 1 did like 12 times. This might be an option for you, right? Because in 12 months, this will not be an option anymore. The equity that you've made over the last 3 to 5 years, that will be not wiped out entirely, but it will go down, right? And it will not go down at the same rate as that single family home that you wanted to purchase, right? So this is the kind of market, a more neutral market, where the values are still at close to their maximal value, right? Like close to the peak. This is the time to act. You are not going to find a better environment to move up in, right? So, and the same thing holds true for people that are downsizing, right? Like if you're thinking about downsizing in the next 3 to 4 years and you're moving out of the area, now's the time to do it, right? You're close to the maximal value. And at this time next year, I don't know if we're going to be able to say that, right? And so I do see a lot of those downsizers that are moving out of the area capitalizing on that. And I think that's evident in the fact that our inventory is greater than it's been in a long time, right? And so there's a lot of people that are finally maybe a little slower to react than they should have been, but they're finally realizing that now's the time to do something about it. And now that we're ramping into the spring season, I expect there to be more homes that come on the market that fit that bill, right? But that's my message, folks. I really feel like it's fairly straightforward, right? There's not much more to talk about. Pending sales, as you know, they are actually fairly neutral, which is very good for this. Which is very good because it could have been a lot worse, right? It could be a lot worse at this point, especially if you're a home seller. So don't wait and regret it in like 5-10 months, right? Like now's the time to do it, guys. All right. This is Danny Gould with the Gould team selling Silicon Valley, and I will catch you guys in the next video.